Be greedy when others are fearful, and be fearful when others are greedy. What's up, folks? Welcome back to Strong Finances, and today we're talking about buying stocks in the middle of chaos. Now, I know what you're thinking. How can you recommend buying stocks of banks and financial service companies after high-profile bank failures? But listen up. A high-profile billion-dollar financial services company is saying you should do exactly that. And not only that, they even recommend buying shares of a bank whose stock was down more than 70% in pre-market trading this past Monday. That is, of course, First Republic Bank. And the projected price target for FRC is $140, which would make for a 71% gain from Friday's close of $81.76. Before we dive into the list, let's talk about one of the greatest investors of all time, Warren Buffett. In his annual letter to Berkshire Hathaway shareholders in 1986, he wrote, "We simply attempt to be fearful when others are greedy, and to be greedy when others are fearful." And my friends, this is one of those times when contrarian investors will become greedy amid turmoil, following the failures of Silicon Valley Bank and Signature Bank of New York. Now, last week, the NASDAQ Bank Index fell 16%, while the S&P 500 declined 4.5%, including reinvested dividends. Christopher McGrady called these two banks unfairly punished as investors looked for SVB read-throughs in a report on Monday. Now, let's talk about the latest regulatory developments. Federal regulators have set up an emergency lending facility to help banks avoid selling securities for losses if they need to raise cash to cover deposit outflows. Banks are now able to pledge securities as collateral at par or face value for borrowing through federal regulators' new emergency lending facility. So this means banks can avoid selling government bonds and mortgage-backed securities at a loss if they need to raise money. Among the companies on this hot list of recommended buys, McGrady called U.S. Bank Corp., South State Corp., and Old National Bank Corp. Safe haven bank stocks. But he went on to write that First Republic and Western Alliance Bancorp offer greater upside potential in the near term, given this weekend's actions and last week's significant sell-offs. He also warned that these stocks come with more downside risk until investors solidly regain confidence in the banking system as a whole and their handling of deposit and liquidity concerns. Here's what you came for. Here is the full list of stocks that the major firms highly recommend that you buy now. Now keep in mind, there are companies sinking hundreds of thousands, millions of dollars into these companies right now because they see that there's an opportunity, and now you can have it too. First is Western Alliance Bancorp, which we already talked about. Ticker symbol is WAL. Now, the closing price on March 10th was $49.34. The target price is $85. That is an implied 12-month upside potential of 72%. Second is First Republic Bank, ticker symbol FRC. On March 10th, they closed at $81.76. The price target is $140, which is an implied 12-month upside potential of 71%. Next is U.S. Bank Corp, ticker symbol USB. They closed at $40.62 on March 10th, and there's a price target of $58 for them. That would be a 43% implied 12-month upside potential. Next is South State Corp, ticker symbol is SSB. March 10th, they closed at $75.72. Price target is $100. That's a 32% 12-month upside potential implied. Next is Old National Bank Corp, ticker symbol is ONB. March 10th, they closed at $15.96. Price target is $22. That's an implied 12-month upside potential of 38%. You're not going to see this holding your money in the bank. Apollo Global Management Incorporated is the next one on the list. Ticker symbol is APO. March 10th, they closed at $60.29 with a price target of $88. That's a 46% implied 12-month upside potential. Next is AGNC Investment Corp. Ticker symbol is AGNC. March 10th, they closed at $9.97. Price target is $11.75. 18% implied 12-month upside potential. Next is Discover Financial Services. Ticker symbol is DFS. March 10th, they closed at $102.14. Price target is $123. That's an implied 12-month upside potential of 20%. Next is American International Group Incorporated, also known as AIG. That's the ticker symbol, AIG. They closed at $53.15 on the 10th, and they have a price target of $76, which is a 43% implied 12-month upside potential. Next is Reinsurance Group of America Incorporated. Ticker symbol is RGA. They closed at $133.74 on March 10th, with a price target of $201. That's a 50% implied 12-month upside potential. Last but not least is good old American Express. Ticker symbol is AXP. March 10th, they closed at $165.70. Price target of $201. That's a 21% implied 12-month upside potential. Where can you find returns like this? Not with your money sitting in the bank. I gotta say it again. Should you follow the advice of billion-dollar investment firms that buy bank stocks now? Well, that's ultimately up to you. But if you're feeling brave and contrarian, it might be worth considering. Just remember that there is some downside risk involved until investors regain confidence in the banking system's handling of deposit and liquidity concerns. It's always good to do your own research and consult with a financial advisor before making any investment decisions. And if you do decide to take the plunge and buy bank stocks, just remember, be greedy when others are fearful and be fearful when others are greedy. Stay strong, friends. Like and subscribe. Share this with a buddy. Strong Finances out.